Welcome to the deep dive. Today we're digging into Micron technology, ticker MU.
Right, the memory chip guys.
Exactly. And what's interesting is, well, the market's been a bit shaky, with President Trump's recent tariff news.
Mm-hmm.
But there's this piece from the Motley Fool that kind of goes against the grain. It suggests maybe, just maybe, Micron's actually looking attractive right now.
Interesting timing for that argument.
Yeah. So our mission here is to really break down what they're saying, unpack that analysis for you, and figure out, well, why Micron might be standing out.
Definitely worth looking at. The article, it starts by setting the scene, right? How these tariffs are hitting the whole semiconductor sector.
Right.
It points to the Van Eck semiconductor ETF. That's sort of a benchmark for chip stocks. And it dropped, well, as much as 16%.
16%. That's quite a dip.
Yeah, and notably more than the broader NASDAQ. And this is after a really strong run for semiconductors, driven by all the AI excitement since ChatGPT launched.
So investors are clearly spooked about the chips then.
Seems like it. The article suggests there's real fear about tariffs piling on to existing worries about, the cyclical nature of the chip business.
Okay, so let's get into the specifics of these tariffs and chips. The article draws a really key line, doesn't it?
Uh-huh.
It says the bare die semiconductors, the raw chips themselves, they're actually exempt.
Correct.
But the electronics, the finished products using those chips, they're not exempt.
Exactly. So your phone, your laptop, whatever contains the chips, those could get hit by tariffs.
Okay. So even if Micron's own chips aren't taxed directly coming out of the factory, the things they go into could get more expensive.
Right. And that creates this ripple effect worry. If gadgets cost more, maybe fewer people buy them.
And that circles back to demand for Micron's memory chips.
I see. That's the fear driving that steeper drop in the semiconductor ETF compared to the NASDAQ. Investors are connecting those dots.
They're worried about supply chains getting tangled, consumer demand shrinking, that kind of thing.
Precisely. But this is where the article pivots and starts making the case for Micron specifically, why it might be different.
All right, let's zoom in on Micron then, because the picture painted is of a company that was actually doing pretty well before all this tariff talk heated up.
Oh, yeah. They reported their fiscal second quarter results ending back in February, and the growth was, well, pretty strong. Overall revenue up 38%.
38%. That's substantial. What was driving that?
You guessed it, AI. The demand for artificial intelligence applications. It led to record revenue for them in data center DRAM.
Ah, the data center side. That makes sense with the AI boom.
It really does. And the article highlights a fascinating shift in where Micron's money is coming from.
Right.
The share of their revenue from data centers and networking, it basically more than doubled in just the last year.
Doubled. From what to what?
Went from around 25% of their revenue up to 55%.
Wow. Okay, so they've really hitched their wagon to the AI train. Less reliant on just PCs and phones now.
Exactly. It shows a successful strategic shift, positioning themselves right in the heart of that AI growth.
And it wasn't just sales, right? Profitability looked good too.
Yeah, that improved dramatically. Adjusted earnings per share, it jumped from $0.42 to $1.79.
42 cents to nearly 180. That really tells a story about their current strength, doesn't it? Thanks to AI.
It absolutely does. Strong momentum. But then the article adds another layer, something quite unique about Micron, how they actually make their chips.
Right, the manufacturing. They're not fabulous like a lot of chip designers.
Correct. Many companies design chips but outsource the manufacturing. Think Nvidia or AMD, for example. Micron, though, they have their own fabs, their own factories.
And crucially, they have them in the U.S. The article says they're the only domestic producer of memory chips.
That's the key point. The only one based here in the States making this type of memory.
Now, that feels like it could be a huge deal right now, doesn't it? With all the talk about reshoring manufacturing.
Potentially, yes. And it ties directly into the CHIPS Act.
Ah, the government funding. How much are they getting?
The article mentions Micron is set to receive over $6 billion from the federal government through that act.
$6 billion. Okay, so you've got domestic production plus government backing.
Right. The article suggests this positions Micron quite favorably, especially if the administration continues pushing for more manufacturing to come back to the U.S.
And they're actually building more capacity here too, aren't they? Something about a massive new fab.
Yeah, they're currently building what's described as the, quote, biggest chip fab in U.S. history.
Wow. So connecting this back to the tariffs, being a U.S. manufacturer could shield them a bit.
That's the argument. It could offer some insulation compared to companies relying entirely on overseas production, at least from certain direct tariff impacts. It's a major differentiator.
Interesting angle. But they're not only in the U.S., right? The article mentioned Asia, too.
Good point. No, they have a global footprint.
Yeah.
They also produce chips in Asia. Japan and Taiwan are mentioned for their leading-edge stuff.
So that's diversification. Maybe another strength. Reduces risk if one region has issues.
Exactly. It gives them flexibility, not putting all their eggs in one basket, which is pretty valuable with all the trade uncertainty floating around.
So it's a mix. Strong U.S. base, getting stronger, but still with global operations.
A combination, yeah. Domestic core plus international capability.
Okay, so company doing well financially, strong AI position, unique U.S. manufacturing angle getting government support, and global diversification. Now let's get to the stock price and valuation, why the article thinks it's maybe too cheap.
Right, the core investment thesis. The article points out that Micron's stock price fell quite a bit after the tariff news.
Back down to levels we saw when?
Throughout fiscal year 2023. But, and this is a crucial context the article provides, fiscal 2023 was a really tough year for Micron.
Ah, right. That wasn't a good time for them, was it? What happened then?
Well, demand for PCs and smartphones cooled off after the pandemic boom, and there was a big oversupply, a glut of memory chips. Micron's revenue actually fell by about half.
Half. Wow. Down to what, about $15.5 billion?
Yeah, around there. And they weren't making money. They reported an adjusted loss of nearly $5 billion.
Okay, so the stock price might be back at 2023 levels.
Uh-huh.
But the company's in a completely different place now.
That's the argument, precisely. The business health is much, much stronger today, thanks almost entirely to that AI surge.
And didn't the article mention Nvidia?
Yes. It points out that Nvidia, the AI chip giant, is now Micron's largest customer. That alone tells you how much things have shifted.
That's a fundamental change from relying on just PCs and phones.
Absolutely. It highlights how AI has really reshaped their prospects. So a similar stock price doesn't mean a similar underlying business condition at all.
Okay, so that brings us to the actual valuation metric, the price-to-earnings ratio.
Right, the P/E ratio. Based on their recent trailing earnings, the article says it's now down around 13.
13?
Yeah.
And the author sees that as cheap, a bargain.
Yeah, that's the suggestion. Especially when you contrast it with their current growth, the AI momentum, and how much better the business is doing compared to just, 2 years ago when the stock might have been at a similar price level.
So the argument is basically the market is maybe freaking out a bit too much about tariffs across the board for all chip companies.
Kind of lumping them all together.
And maybe not appreciating Micron's specific strength, like the U.S. manufacturing and the huge AI tailwind.
It's the core idea. The market might be overestimating the tariff risk specifically for Micron or underestimating its resilience and growth potential from AI.
So even with potential bumps from tariffs or a slower economy, the current price looks tempting.
That's the case being made, yeah. That the potential upside driven by AI and their specific advantages looks pretty good compared to the risks at this valuation. The article uses the phrase, too cheap to ignore.
Okay, so looking ahead, the long-term view presented in this analysis is quite positive then, despite the tariff noise.
Yes, very much so. The conclusion is that while there could definitely be short-term volatility, markets reacting to headlines, Micron seems well set for longer-term growth.
Driven by that ongoing AI demand, their recent business improvements, and what looks like an attractive entry point on the stock price right now.
Exactly. The takeaway for the listener, according to the author, is that patience with Micron could likely pay off.
Look beyond the immediate tariff headlines and focus on the fundamentals.
Right. The AI trend isn't vanishing. Micron's tied into it. They have the U.S. manufacturing angle, the CHIPS Act support, and the current valuation. It builds a compelling case, at least based on this Motley Fool piece.
Okay, so let's try and wrap up the key takeaways from this deep dive for you. The core insight from this analysis seems to be, tariffs are a worry for the semiconductor sector.
Definitely casting a shadow.
But Micron might be different. Strong AI-driven growth, that unique U.S. manufacturing position helped by government funds, and a stock price that, compared to its current health and AI prospects, looks potentially undervalued.
Well put. The argument is the market might not be giving Micron enough credit for its resilience and specific advantages in the current environment.
And that the recent dip could be more of an opportunity than a warning sign, especially if you have a longer time horizon.
If you believe in the ongoing AI story and Micron's role in it, yes, that's the perspective.
All right. Well, This whole discussion about Micron and its U.S. manufacturing base leads to a perhaps more provocative thought for you, the listener, to mull over.
Okay.
In this world of shifting global trade, how big of an advantage is domestic manufacturing, really, for tech companies like Micron? Is having factories in the U.S. a truly unique, sustainable edge in the long run?
Interesting question.
Or, are other things maybe more critical long-term, like pure technological innovation, or having a super flexible, globally diverse supply chain anyway? Is that U.S. presence a trump card? Or just one piece of a much bigger puzzle?
Yeah, is it the key differentiator or just one factor among many? Definitely something to think about as things keep changing.
Indeed. Something for you to consider. Thanks for joining us for this deep dive.